Hey, thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar or a combination of that with the headline news or geopolitical. But sometimes it get really confusing out there if you are watching and then all of a sudden good news is now bad news as the market sentiment changes and may not understand why it's going on and why that is now bad, good news now bad news. So we try to get into more information as to providing that information to you so that way if you're following along and looking to refinance or buy a property and you're following the mortgage rates, hopefully this will give you the information you need to make an informed decision for yourself as to whether maybe lock in or maybe hold on a little bit. A little bit about myself is I am a loan officer. I do work with a national lender. We lend in all 50 states. So if you're looking to buy or refinance, we'd love to be able to earn your business. So please reach out and let's talk on how we can go ahead and benefit from a relationship. But more than that, we like to be a resource for you folks. So if you guys have got questions about anything, please feel free to reach out. We are here to help you guys out. So let's begin. Today we'll start off with the economic calendar. Today is really actually a very slow day in terms of what's on here. We don't have anything in terms of any significance. There's a 3-year note auction, but it shouldn't really have any bearing on our mortgage-backed securities or our market here. Tomorrow, however, we do get a 10-year auction, which will come out later, which can affect us because that has been a little bit more impactful. The big date this week will be Wednesday as we get the CPI report. That's the inflation data. The last time we had it, the market dropped pretty dramatically. As a result of that, it kind of put us into a bad range. We've kind of somewhat rebounded since then, but that's what kind of started up. Now the PCE report, the Fed's favorite gauge for inflation, came in a little bit more tame. So we'll see if the CPI report comes in a bit more tame as well this time around. And now we also got jobless claims, which we get every week. But another inflation data will be coming out on Thursday, the PPI. It doesn't get as much notoriety as the PCE or CPI because those are consumers, and sometimes if their profit margins decrease a bit, they don't always pass on those costs on to the consumers. So but because we're talking inflation, it has been a big concern. They will kind of keep an eye on that, so it could have some impact. And then lastly, on Friday, we got the retail sales here, and then the Empire State Index, which is manufacturing in the New York region. So the last couple of reports have been saying is negative, some contractions in those areas. So we'll kind of watch and see if that trend continues or if we see some improvement from there. So again, here's today's just the 3-year auction. Doesn't have any bearing on it. So the markets are really being dictated what's going on the headline news and geopolitical. Right now, geopolitical is more China reacting to more COVID cases and taking more steps again in other areas as they have a zero COVID policy where they want to try to eliminate it. So as a result, we're going to see some lockdowns in certain areas of China, which could also result in global supply issues as they do make up approximately 25% of the manufacturing out there, and which is a big could bring out shortages in supplies as well as, of course, increase. And that could be inflationary issues as well. As a result, we saw in Europe they had a bond buying process, and that kind of spilled over into ours. So yields are down today. We did touch off the yields. We did touch off the 25-day moving average. Since then, we pulled below the 3%. As you can see here, we're just under 2.99, or now at 2.99 right now, which is good news that we're again below the 3% threshold. Here on the mortgage-backed securities, we're on Friday we broke just below the 25-day moving average. Now today we're back above it. Right now we're up at 34 basis points, and that translates to a little bit better pricing on a mortgage rate sheet. So we should see at least 1/8%, maybe 1/4% better in terms of our rate sheets. So the rate sheets should look a little bit better today than what we saw on Friday. Now, lastly, we'll touch on our the average rate for conforming loan limits. These are a day delayed due to what we saw on Friday. So these should be based more on Friday's results, not today's. So take with a grain of salt. They do have points built into it, so Again, they don't. That's why you're not going to see the 1/8 increments on these. So the 15 year is now at 5.04, and the 30 year is at 5.84% according here. So if you guys would like a rate quote, we're here to help you guys out. So feel free to reach out. We'd be more than happy to assist you in that category. We love to earn your business, so please give us a shout on that. But again, if you have anything to ask, we're here. So let us know. If you guys can help us out, we'd greatly appreciate it. If you guys can like and share these videos, help our channel grow a bit more. We'd greatly appreciate that. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.